Okay, stock has moved around and it's moved up, it's moved down, but it's moved back towards 745. So the stock is trading at $745 a share. We came in and said, you know what? I've looked at the charts. The stock to me looks like it may stay below 745, so I'm going to sell to open the 745 call option, and to protect myself, I'm going to buy to open the 750 call option, creating a very tight at the money bear call credit spread with a net credit of $1.10. Now, I know what some of you are thinking. You're saying, good grief, Bill, I mean, you're right on top of that thing. If it starts going higher, your credit spread is going to get ate up, and you've got $3.90 of risk with $1.10 of credit. You're right. I'm not crazy about that reward to risk ratio. You know what? What if we came in, since we're in a bear call spread, why not also go in and do a bull put spread? Right? At the same time, on the same stock, why don't we go in and sell the 745 put for $1.40 and then buy the 740 put for $2.35? You see, what this does is this adds credit to our position by selling to open the 745 put, and then protecting myself by going out here and buying to open the 740 put. And in that case, I was bringing in, again, another, was it $1.10, was it not? $1.35, $1.05. Okay, so we're bringing in $1.05 on this side. And understand that the stock cannot be above and below the spreads at the same time. In other words, at expiration, this stock, worst case scenario, could be here or here, but it can't be both. So for that reason, my maximum risk in this trade is the $5 on one side or the other. It's not both. It's one or the other. I have $5 of maximum risk total, right? That's my total maximum risk. But how much money did I bring in? I mean, I can even do that math. $2.15 net credit is what I brought in. So when we subtract that $2.15, our real risk in this trade has been reduced to what? $2.85. I have $2.85 of risk to $2.15 of reward. I'm approaching a 1-to-1 reward to risk ratio here, guys, on a credit spread strategy. That right there is why I like this trade setup. In addition, because of the $2.15 that I brought in of credit, my theoretical break-evens are at 247.15. Yes, that is a calculator you hear in the background because I'll make sure I got this one right for you. And 742.85. Which means, yeah, that should be 747 up here, shouldn't it? Which means, watch this, check this out. Boom! God, that was good. Gilly says there isn't much open interest on the puts. Doesn't matter because it's part of the spread, Gilly. When we're doing spread trades, we really don't care about the open interest. So those theoretical break-evens mean that I can get in and close out this trade at essentially break-even by buying back the short call at 747.15 near expiration or the short put at 742.85, and I would still not lose money on the trade. Does that picture help out, Brian? Brian asked me to draw it out. So now, if Google, I call it Google because that's the L series, right? Those are the voting shares. If Google stays more or less around 745 for the rest of the day, now it'll go above 745 for a little while, and it'll go to 746. You'll be like, oh my God, this is terrible. This is horrible. Oh, wait, never mind. It doesn't until 747.15. I don't even have to worry about this thing at expiration. And then it'll go down here, and it'll go to 743, and you'll be like, oh God, this is terrible. And then you'll realize, oh wait, no, I'm still okay on this. And if it moves sideways through the day, what is going to happen to the value of all in that put that you sold? They go down in value. So the whole spread that you brought $2.15 on, as we move sideways through the day, that spread loses value, and because you sold it, you gain value on that. And what many of us in here have found is that if we do this, we can buy back the spread later in the day for less than we sold it for. So typically, I hang on to these till maybe 45 minutes, 30 minutes, something like that, before market closes. The market tends to get a little bit volatile and crazy in the last 45 minutes, so we'll get rid of or buy back whatever the spread was at that time. Jose says, do you have a preference of doing this type of trade on Friday versus the rest of the week? Yes. The reason is this. Look, if I do this trade on Monday, let me ask you this. Is the probability that Google will be above or below 745 by Friday pretty high? But on Friday, I can look at this and go, man, I can watch this thing, right? I got this. We're pretty close to 745, and we're pretty close to expiration. It's worth the risk. Does that make sense? All right. Now, one of the problems that we have in doing this trade, that we have had in doing this trade with eSignal, is if you're doing this in a funded account, guys, you had to go in and do exactly what I just did. You had to go in and you had to sell this option, right? So you go in and you're like, I'd like to sell the 745 call option. So you go over and you click on the sell to the 745. Well, if you're doing that in a funded account, unless you got a whole crap load of money and you are level 5 cleared, you're not going to be able to do that because you're selling a naked call there. So, oh, crap, that's right. So, okay, fine. So you go to buy, right? So you're like, okay, I got to buy this option first. So now you buy this option, all right, and you go in there and you buy it. And then you're like, okay, now write that down, got that. Go over, and you go to sell the 745 call, and the price is freaking changed, right? It was 135 a second ago. Now it's 120. Now it's 125. So the price is changing while I'm trying to get this order in, and that'll drive you crazy. DC Jim, stop me if I'm wrong, right? I mean, does that not just irritate the crap out of you? So for 2 years, I have been trying the best that I can to get this ability to enter multi-leg option orders on one sheet, right? Where you're entering the whole trade together, because wouldn't it be nice if I could say, here's what I'd like to do. I would like to sell this one, buy this one, sell this one, and buy this one, and put all 4 of those on one order form. Right? That would be kind of nice. And then the whole order goes in, and you just say, you know what, I'd like to do it for X, whatever X is.